Well, it's been another interesting week in the markets. Last week, we predicted there would be more volatility likely and that it probably wasn't the end of the sell-off. Would you look at that? We are already back down to the support level on the QQQs. We did sell off into the close, which is usually not a great sign for the Monday morning. VIX is also still pretty high, around 20 or so, which usually means there may be more pain to come, but we did manage to hold this very key level, this trend line that we've been hammering on over and over again. You see price just continually is heading back here, testing it, and eventually you would imagine that we would break down and have a bit of a correction going on in the Nasdaq. I would be targeting 530, this gap fill down here as a very nice level to look for a potential further 11% from here. Now, that's not necessarily going to happen next week. We'll have to see what price decides to do on Monday, but definitely was a bit of a bearish feel. You kind of erased the entire week's gains in just a single day, essentially, on Thursday, and the bearish price action perhaps continuing. And so far, we've been right on the money when it comes to tech selling off. Will it continue to do so next week? Let's find out. Meanwhile, the dollar is just barely hanging in there, still holding this parallel channel. If it does break down, then I would personally expect that to coincide with stocks moving higher. And likewise, if it does head higher, then I would imagine we're getting a bit more of a move down in the stock market, in the Nasdaq, etc. The Kevin Warsh nomination was, of course, an attempt to keep the dollar propped up and stop it from breaking down further. But there is the concern that many countries are dumping US assets and treasuries, which could, in theory, bring the dollar lower anyway. So that's something to keep an eye on. I'm not committed to either the upwards direction on the dollar or the downwards direction. I'm just going to wait and see whether this breaks back up or is breaking down from the parallel channel to see what's going on there. Still very much looking at oil. It hasn't yet broken out particularly, but on oil there is this strong buy signal that we've had in recent weeks. So I do expect upward movement on oil in the future. Perhaps that will coincide with the US attacking Iran and them blocking the Strait of Hormuz. That is very much a possibility. I would imagine that could even be a sell the news event. Probably not, but perhaps oil prices will run up in anticipation of that happening. I'm still very bullish on oil. We do have to ask though, what does that mean for the economy and for the markets? If oil is going up, it quite often can be a sign that the economy is doing okay because people are demanding a lot of oil for their businesses, for transportation and all this kind of stuff. So if we were seeing oil move up, I would expect the economy to be doing quite well. We kind of see the opposite at the moment, although the recent jobs data and inflation data, if you take them at face value, were quite reasonable, quite okay. Even better than expectations. Another chart that I'm really looking at the moment is the US 10-year minus the Japanese 10-year, which essentially is the spread between the government bonds between the US and Japan. And typically when this has gone down aggressively, then it has not been good for risk on assets. This is to do with the yen carry trade. I'll have another video on this topic coming next week, and we can get into the nitty-gritty of it. But the long and short is I'm seeing this line coming down, which likely is going to coincide with some kind of market event, some kind of drawdown in the S&P, in the markets in general. Usually when you have these kind of events, this was the COVID crash, coincided with a rather low spread on the yields. Likewise, this crash back here was the 2008 financial crisis. This was a less noticeable slight correction in the markets at that time in 2012. I would expect if we are getting much lower on this particular metric, then there might be, a crash of some kind in the markets that comes as a result of this spread moving down. But I'll have a video, as I said, next week on this particular topic in more detail if that interests you. Gold is not particularly showing any signs of slowing down, still doing relatively okay. What does this mean for markets? Well, it could mean that people are still pricing in uncertainty and the potential for the reignition of inflation, perhaps due to rate cuts coming in the future. The US 10-year has also been falling back down, which signals lower interest rates on bonds going into the future, which could be an indication that rates will be coming down and that inflation will be rising after that. And a similar story on the 2-year also been going down quite a bit. The spread on the 10-year and 2-year is still quite stable. So again, we'd need to see this heading quite a bit higher before you'd say, okay, we're definitely in a recession and this is not good for markets and we're going to need rate cuts, etc. from the Fed to help with that. So still keeping an eye on this, but no big moves happening really. In fact, we're coming back in a little bit now. So we're in a somewhat precarious position, I would say. I think it's entirely possible that the S&P and perhaps the Nasdaq may see a bit more of a dip, a bit more of a correction. The S&P has been sort of holding around these levels fairly well. There's a consistent bid on the market, of course, from retail investors and 401ks and all the rest of it. But if we do break down here on the Nasdaq, then you're imagining there's going to be another probably 10% drop or so from these levels, which could be quite brutal. I kind of imagine that could be actually a buying opportunity, as I'm seeing that oil will probably go up, which, if it is due to just geopolitical risk with Iran, then it might not be a good sign for the economy. But equally, I could imagine there'll be more demand in the economy due to the AI, the progression of the AI build out, companies becoming more productive, and this kind of thing could be good for the economy in general. So I'm not convinced we're going to actually break down fully and have a full-on bear market just yet. I imagine there'll be a breakdown at some point, a bounce, and then perhaps after that bounce gets, sold off, maybe we make a new high, maybe we don't. That's probably when I'm looking at more of a longer term bear market. Now, tech has very much been being sold off, and people have been rotating into safe names, things like healthcare, with Merck, for example, going crazy. Eli Lilly is another one, just been doing very, very well, ran up quite a bit. So people have been looking for safety. Things like Walmart are hitting all-time highs. People are just really looking for those more safe stocks, or the stocks that have not been participating so much in the massive AI trade. Software still getting hammered. Duolingo's down massively, coming in nearly to the levels that I said would probably be good for a recovery bounce or some kind of a low. Of course, similar story on Adobe and all kinds of other software businesses. We're expecting this will at some point turn and software will outperform in some way, but might not be just yet. I'm going to wait for the trend to change on that before jumping in myself. Netflix continues to drop just as we anticipated. Not very surprised by this at all. I'll probably just remove this level. I suppose it might be useful in the future as a potential point of resistance, but it is likely we're going to head even lower still on Netflix. Similarly, it's hard not to continue being bearish on names like Palantir, Meta, etc. The patterns that we've talked about already are continuing to play out to the downside. Similar story with Hood. You've had negative price action. It might come back up here to the $85 level just to fill the gap before I imagine it will head lower. Although there's always the possibility that crypto is going to run up a bit, have a bit of a recovery rally, and perhaps Hood and these other names can also participate in that. SoFi is managing to hold its recent lows in some level. I would hope that it can. If it breaks down from here, then I'm more favoring the bearish perspective, which takes you all the way down to $7. But if it can break back up, then you've got good, strong target up at $45. ASTS has been sold off pretty massively from the top of the parallel channel. We talked about this before and said the target would likely be around $68, $67, something like this. If you are able to get there and still bullish on the stock and the market, then it could be a great buying opportunity. If not, targets are lower, as we talked about in the video. Same thing on Rocket Lab. After I made my video, the stock sold off quite aggressively. I still imagine it will head to the bottom of the parallel channel before heading back up. And again, if you're bullish on the market and on space stocks, then it could again be a good buying opportunity there potentially. At least you have very clear levels of invalidation if you are taking a trade. Meta still looks like a head and shoulders pattern. Hasn't quite confirmed yet, so we have to wait to see if that breaks down. But you imagine if the QQQs do go down on Monday, then would take Meta and all the tech stocks with it, of course, and that would complete the pattern on Meta. You'd expect then to go down to the sort of $400 level or so on Meta if that pattern does end up playing out to the downside. Google doesn't look particularly good, a bit of a bearish outlook. I imagine it will probably come down to the sort of $220 level at some point, the bottom of this parallel channel. Might not be immediately. There's also a gap down here at 215. I should maybe do a separate video on Google overall, but yeah, would imagine this has more downside to come. So I think the narrative here really is a lot of people are fleeing to safety. This is Pepsi, has had a big run up. Coca-Cola, McDonald's, all these stocks have been performing well, which usually is a sign that we may be nearing the end of the cycle when tech starts selling off and the defensive names start being bought up heavily. I would be careful. Any influencers that are telling you, hey, Meta or Hood or Microsoft, they've been sold off a lot, therefore they're cheap, therefore I'm going to buy them. You've got to be careful with that mentality because there's a reason those stocks are getting sold off. It's the smart money, taking profits, distributing to retail investors and making sure they're out of the speculative, dangerous, risky names in the event that the markets are going to come down a bit, okay? So just be careful any influencers telling you that you need to buy this stock because the PE is so good or because they have a large amount of cash flow or whatever. It probably won't matter in the event that the markets end up crashing or correcting significantly. And that's why you see people fleeing to safe names such as a Pepsi or a McDonald's or any other sort of safe aspect of the economy, even gold and metals. This is why you're seeing those assets run up while, Bitcoin, for example, has been sold off massively. Now, of course, I'm not saying there's necessarily going to be a breakdown on Monday. We can definitely bounce here and in fact go higher. And I did actually close my put positions after this sell-off. I wasn't feeling super comfortable to be exposed in that sense, but I think in this market, you just have to be very careful about the narratives that people are pushing your way. Yes, stocks can become cheap, but they can also become cheaper. And quite often when a stock is going down, it just predicts that it's going to go down even more rather than it's necessarily a buy the dip opportunity. But we'll see what the market ends up doing here. Will we go up? Will we reverse? I am, as I said, bullish on oil, so I could imagine that the stock market will continue to perform okay for perhaps even many, many months, maybe 8 months or so before you eventually get a rollover and a big, big bear market that everyone has been calling for. In such a situation, I think both the bears and bulls would look a bit silly. Obviously, the bears calling for lower prices for a very long time eventually will probably be right, but it might take longer than they think. And likewise, the bulls will eventually, well, those bulls that get too greedy and constantly buying the dip and never taking profits are probably going to be punished as well in the end. So that's the outlook on the market. Will the S&P get back and tag the trend line, the parallel before we get a correction, or is this the start of a dip that we may see and a bit of a bloodbath in the tech markets? Let's find out. With that being said, thank you very much for watching, guys. Do subscribe as always for more daily chart analysis and macro updates, and I will see you next time. Bye-bye.